Warren Buffett, one of the most renowned investors in the world, once said, "If you do not find a way to make money while you're asleep, you may have to work until you die." My name is Damian Wandera. I'm an investment associate at HAAWK Capital, and I'm going to take you through ways to make passive income, to make money while you sleep. How does a fixed income fund generate return for investors? If I'm an investor in a fixed income fund, how do I make money? And this is the answer to that common question. The key source of return for a fixed income fund is interest income, and a secondary source of return is capital gains. But how do you make interest income from a fixed income fund? The fund invests in debt assets. Debt assets can be categorized into two broad areas: public debt and private debt. And public debt can be further categorized into several securities. So one of them will be government securities. Government securities include bonds and treasury bills. So treasury bonds have a longer investment period than treasury bills, but they all operate in a similar way in that the investor lends money to the government and the government pays the money back to the investor with a fixed interest, at a fixed interest rate. And that's how the interest income becomes a source of return for the fixed income fund. Another security under the public debt are listed corporate bonds. Listed corporate bonds are ways through which companies raise capital by borrowing from investors in the capital markets. In a similar way to how governments pay interest on treasury bills and bonds, private companies also pay back the money they raised through the bonds, through the corporate bonds, to investors with an interest, so at a fixed interest rate. And that's how corporate bonds also generate interest income for the fund. When you look at private debt assets on the other side, these are bonds that are not listed on the stock exchange, but they're issued by private companies and they are traded privately. They are arranged either by an investment bank or a boutique investment advisor, and they also generate interest for investors because the money that the company raises is paid back at a fixed interest rate.